Alright, for this video I want to go over the Form 8801, which is the credit for prior year minimum taxes, and this is going to be for the 2023 tax year. Now the Form 8801 has to do with alternative minimum taxes, so we're going to go through this full 8801 example we have for the year, and it's part of the taxpayer's full 1040, so we'll cover all the other pieces within the return that are necessary to kind of pull all this together. And then we also have, for reference, the taxpayer's prior year Form 6251 and their full 1040 as well. You'll need the prior year return in order to figure out some of the current year values that have to be reported on the 8801. And then lastly here, just one slide covering some background on both of these forms and the credit, and then some details on the fact pattern itself. So let's run through the slide first, and then we'll get into the forms afterwards. So just some real high-level basics on the AMT. So the 6251 is where you would report and calculate your alternative minimum tax if you have any. Now, most taxpayers will find that they never are in an AMT position, but if you are, which we're going to see in our fact pattern here, you should be completing the Form 6251 to calculate your AMT, and then in subsequent years, and perhaps even for the current year, if you have carry forwards, you need to be doing an 8801 as well. Now, the Form 8801 is used to track the amount of your prior year alternative minimum tax. So let me just flip to the return really quick and show you what I mean. So this is last year's return, the 6251 for Adam taxpayer. On the bottom of the form here, line 11, we have an AMT amount of $1,939. So that AMT amount is included in his Schedule 2 as alternative minimum tax, and it's added on page 2 to his total tax liability of $1,939. So when we talk about the Form 8801 and the AMT amounts that you paid in the prior year, we are tracking those amounts going forward using this 8801 because we want to see if we can use any of those prior year payments as an AMT credit. All right. Now, what happens, what causes AMT to start with? So AMT results with certain deferral or exclusion items. So deferral items are just that, they're deferred. So they are temporary differences in your taxable income between federal and AMT purposes. And so it's these deferral items, the temporary differences, that can create this potential tax credit in future years. Exclusion items are permanent tax differences. So these items are generally not going to result in any kind of future credit that you can claim on subsequent tax returns. Now, in this example, we're going to be looking at AMT items for ISOs. So ISOs are one of many AMT adjustments that can be made on the 6251. And what's unique about ISOs is for regular federal income tax, when you recognize that ISO, there's no income inclusion for federal income tax purposes, but you do have an inclusion for AMT purposes with respect to the bargain element. So the bargain element, quote, bargain element is this difference between the exercise price and the market price on the day you bought these shares. And so that's what we're going to see in our example here. Now, if you have a credit, an AMT amount that's being carried forward as an AMT credit on the 8801, you're generally going to be able to use this in future years if your tentative minimum tax, so that's on the 6251 for the year, is lower than your ordinary tax liability. And we'll look at the 8801 and see how that amount is calculated. Now, let's look at the fact pattern. So in our fact pattern, we've got Adam taxpayer. He files a 2022 tax return with some large Schedule C losses, so it basically wipes out his taxable income. Now, during that same year, he also exercised some ISOs that he had with his employer, and so there was no income inclusion for federal income tax purposes, that's regular tax purposes, but he did have an AMT adjustment for $80,000. So in 2022, Adam owed zero in federal income tax, but he ended up owing $1,939 of AMT. And so that's what we saw here, right? So he's got the $1,939 of AMT, but zero regular federal income tax on line 16. And that's because of that AMT amount. All right, so now moving forward to 2023, Adam's not going to have any AMT, but he's going to be able to carry forward this amount and use it as a credit on the 8801. So let's have a look at the 8801 and start to fill this out. So the 8801 has 2 pages, so page 1 and then page 2 down here where we calculate the amount of credit that we can use, and if there's any excess, what's carried forward to the subsequent tax year, so 2024. So in starting with part 1, line 1, the line 1 is a combination of lines 1 and 2E of your 2022 6251. So if we have a look at his 6251 from the prior year, we have line 1 minus 9341 plus 2E, which is 0. So we're using line 1 of negative $9,341. Now, in line 2, you have to enter any adjustments and preferences that are the exclusion items. So remember, those exclusion items are not deferral items. Exclusion items are permanent differences. And so in this case, the only permanent item, the only exclusion item we had last year was the standard deduction. Now, that might not be your case, right? In the form instructions, they do have a long list of items that would qualify as exclusion items, things like tax-exempt interest, other items like that. But in our case, we've just got the $12,950, which was our standard deduction from last year. All right, so we've got lines 1 and 2, and now we can complete the rest of the form. So we don't have any NOLs, deductions. So on to line 4, we combine lines 1, 2, and 3. If 0 or less, enter 0. Otherwise, enter the amount, right? So we've got the net of those 3 numbers is $3,609. Line 5, enter the amount based on your filing status. So he's a single filing taxpayer. So $75,900 is the amount we enter on line 5. And then on line 6, enter the second amount here, also based on your filing status. So $539,000 if single, and this is for 2022. So we're talking about what was our filing status last year. So $539,900. Line 7, we want to subtract line 6 from line 4. If 0 or less, enter 0. So that's what we've done. So because that's 0, line 8 is also 0. Line 9, we subtract line 8, which is 0, from line 5, $75,900. And then moving on to line 10, we subtract line 9 from line 4. If 0 or less, enter 0. And then the same thing on line 15 and go to part 2. Right, so we enter 0 here and on line 15 at the bottom, and then we go on down to part 2. So part 2 for us, part 2, minimum tax credit and carry forward. Line 16, we start with the amount of your 2022 6251, line 11. All right, so our 6251 for 2022, line 11, which was the AMT amount, $1,939. So we go ahead and enter 1939. Line 17, enter the amount above from line 15. Well, for us, that was 0, right? So we've got a 0 there. Line 18, we subtract 17 from 16, and we're left with $1,939. Now, lines 19 and 20 don't apply to us because we don't have any carry forwards, right? So if we had any carry forwards from our prior year 8801s, we would enter those. And the same with respect to the qualified electric vehicle credit. So now we're just on down to line 21. Combine lines 18 through 20. We're left with the same $1,939. Now we have to test it against our excess of regular federal tax over our tentative minimum tax, right? So line 22, we want to enter a regular income tax liability minus the credits. So we can get this on page 2. So if we look on page 2 of our 1040 for this year, the amount of credits that we have, we don't have any, right? So the tax we owe is $11,654. If you had a child tax credit, you can use that. So you could reduce it by that amount if you had that. And then a line, Schedule 3, line 20, there are certain credits on Schedule 3 that you can claim in order to reduce that amount as well. In our case, we don't have anything else on Schedule 3 other than the amount of AMT that we're going to be claiming. So for us, we can leave it blank. Okay, so our regular federal income tax liability remains at that $11,654 mark. So that's our line 18 taxes. Because again, it hasn't been reduced by any credits because we don't have any other credits. So we've got $11,654 in tax liability. And then now we have to pull the amount of our tentative tax from the 6251. So if we have a look at our 6251, the tentative minimum tax that we have here on line 9 is $1,842. So if we take that amount back to page 2, right, enter the $1,842, and then line 24, we want to subtract the tentative minimum tax from our regular income tax, and we're left with a difference of $98.12. This number is really important, right? So the larger this number is, the more availability you have to claim the minimum tax credit. So if this amount was, let's say, only $1,000, well, we would be, of the $1,939 that we have available up here, we'd be able to claim $1,000, and then we would have $939 left over that's carried forward to next year. But in this case, because the $98.12 is large enough to absorb the full $1,939, our credit, our AMT amount from last year, we can use the full thing. So as it says here, right, enter the smaller of line 21 or line 24. In our case, the smaller amount is going to be that $1,939. And then also enter this amount on our 2023 Schedule 3, line 6B. So if we go to Schedule 3, line 6B, we have our credit for prior year minimum from the 8801 of $1,939. So when everything is said and done here, the amount of regular federal tax that we are paying for the year, $11,654, we get a tax credit, a non-refundable tax credit for the amount of AMT we paid last year. So there's certainly, deferrals, time value of money considerations, but the way this is working is, we had to accelerate the income inclusion last year, pay the tax, and then now we get a credit for what we paid in the prior year, so it offsets, right? So that is largely kind of the aim with the AMT. If you have just those, small deferral items, if you've got the permanent differences, then that's a different story. But in this case, we were able to use the full $1,939 prior year AMT amount as a credit. So I hope that was helpful. Any questions, feel free to leave a comment below. And as always, I appreciate you watching, and I look forward to seeing you again on the next video. Thanks.